For more on the current state of this rally, let's welcome in Tony Pasquariello. He is the head of hedge fund client coverage at Goldman Sachs. Welcome back. It's good to see you.
Thanks, Scott.
What are you telling your clients? What is this market? What's going on?
A lot's going on. I think the short-term challenges are a few. One is seasonally, this is actually exactly what's supposed to be happening. The last 2 weeks of February are typically the worst 2 weeks of the year. Why is that? Because that is typically when retail money flow starts to inflect lower, which probably gets the momentum story. I'm sure we'll talk about that. You also have, you don't need me to tell you this, a very active kind of headline roulette around policy. I think the order and the sequencing of that has been difficult for investors to figure out. And then lastly, for the first time in a while, you have some other rides to go on with your capital in non-U.S. markets. And so it's a complicated mix. I take Rick's point, I share his sentiment. You want to try to see through some of this smoke through to the kind of the longer term arbiters of the market, be it growth or the Fed or technology. And so I think there's a longer term story, but we're sorting through a fairly tricky period right now.
If you play roulette long enough, you get hurt. Is that on the horizon for this market? Is there just too much uncertainty building around stuff?
I think we feel pretty good about the core underpinnings of the market. So growth has clearly slowed in the first quarter, but we still believe full year GDP growth this year will be 2.5%. Again, a pretty friendly, sturdy setting for the market. The Fed's very much in the background, as you discussed, but I think they can avail themselves of 400 basis points or more of rate cuts should they need to, perhaps if the labor market were to slow down. And then you have the tech piece, which Rick hit on, which is just before our very eyes. I think we've seen this year the step change higher in the realized innovation, in the progress of technology. So I still feel pretty good about that. Again, I just think we're sorting through a tricky period right now.
So this is just a scare? That's how you would sum it up? This is just a growth scare?
I think that's right. In a way, I think we were spoiled in 2023 and 2024. The market was so consistent. It delivered so much strength and so much convexity. And in a way, I think we've kind of evolved into a more normal setting where volatility's risen. The market, again, it's sorting through a lot of variables at once, and inherently they're quite disruptive. I think when we're talking about the upending of a traditional political orthodoxy, I think the convergence and the collision of very disruptive forces in the form of AI, there's just a lot for the market to sort through.
But I mean, coming into this year, I didn't hear a lot of people talking about this was the way it was going to be. President Trump on the campaign trail told you everything that he was likely to do, and the market still remained highly optimistic about what was going to be ahead. Now he's doing the things that he said he was going to do, and now the market is suddenly unsettled?
Okay, so specific to that variable, again, I think the hard part has been for the market has been the ordering or the sequencing. And that's your point. I think we always knew Trump 2.0, this administration would have a mix of carrot and stick. The difficult thing is we've absorbed all the tougher parts up front, right?
Well, because maybe it's more stick than carrot.
Perhaps. But again, I think we're working through the tariff piece, right? We haven't yet gotten to the more market-friendly parts of the equation, be it deregulation or perhaps lower tax cuts. I also think tax cuts themselves. I also think with DOGE, I think the initial sensation was viewed as positive through the prism of the deficit. And then now, as you kind of go through it, there's a worry locally about impingement on the labor market. I still think in the end, the ambition of this administration will be pro-cyclical, pro-business, and ultimately market-friendly. We're just working through, like I said, the harder part of that sequence.